afternoon. Welcome to Korea. 안녕하세요. My name is Young, and I am head of partnerships at Switchboard. Switchboard is a permissionless and fully customizable Oracle, and we offer a full suite of Web3 services from data feeds, functions, randomness, URF, and so on. And oracles play a really crucial role in crypto trading by bridging off-chain world, off-chain data into blockchain. And very similarly, institutional players also bridge the real world into blockchain. And today I'm very thrilled to lead the discussion on how these institutional players are shaping the crypto trading space, and we'll kick it off. So let's start with a round of introductions. Please let us know more about your company and what you're catering and who you're catering to.
Hi there, very happy to be here. 안녕하세요. Everyone is practicing their Korean. My name is Yoann. I co-founded Wintermute in 2017. We've grown to be the largest, essentially, spot market maker in the world. We do some OTC, we do some investments. My role is specifically around overlapping ventures and BD. So, come to me if you need investments, or come to me, if you need a bit of help around liquidity.
Cool. Hi, very good afternoon. 안녕하세요. My name is CJ. I run the sales team for Asia and EMEA at GSR. GSR's function within the marketplace, very similar to Wintermute, actually. Is we're one of the largest altcoin market makers around, market making more than 150 projects. By way of background, I used to be from traditional finance, so most of my career was at Morgan Stanley and Nomura on the trading floor. Besides market making, we look in the OTC space as well as ventures. We're a global presence, so we've got guys across the globe, and I look forward to the panel today. Thank you.
Good afternoon. My name is Shillang Tang. I was the founder and chief investment officer of LedgerPrime, which is a multi-strategy hedge fund. Fortunately, LedgerPrime was acquired by FTX Alameda, and so we're no longer existing. But my new firm is called Bellows Markets, and we're focused on, we're a principal trading firm, and we're focused on bilateral derivatives and servicing institutions.
Awesome. So let's dive in. So kicking off, how would you guys assess the current crypto market in more relation to institutional trading? And compared to the past, how would you say the volumes and scale of the trades have been? We'll actually start with Shillang and go down this way.
Sure. So I can probably talk about this from maybe a couple of perspectives. One is from an allocator and like limited partner LP perspective. The top 5 LPs of LedgerPrime previously, 4 of them either no longer exist anymore or are completely out of crypto. So it's definitely a lot smaller from an institutional perspective, at least from the US side. From like an OTC counterparty perspective, given kind of the liquidity and volatility of the market these days, definitely less capital being allocated and less trading in general. But I would say that there's a lot of positives, right? Like if you speak to institutions and trading partners now, what they're generally more focused on are kind of like operational due diligence, infrastructure, like institutional infrastructure. So we're getting asked a lot more about like tripartite repo, sub-managed accounts. They want more visibility and more control into the assets, which has existed for a long time in traditional assets, and should have existed in crypto. It just, there wasn't the demand and the need necessarily. But it's the right thing to do, right? So I think we're kind of transitioning to that period with these institutions within crypto, and all that infrastructure is now actually being valued and being built. So that's kind of what we're seeing on our side.
I would like to point at him and say what he said. It sort of makes sense across the board. I think there are some nuances that we see which are slightly separate. The market was heading in the right direction in terms of scale, right, of growth, and that happened pre-FTX. What FTX caused, unfortunately, was almost a reset. And the reset was because the ones who got burned the most by the FTX collapse, besides Singapore retail, was actually the institutional guys, the smaller scale ones, from a trading point of view. It's taken some time to build it up, and I think a lot of the focus now has been on taking a step back and saying, okay, how do we become adults in the space? And this is actually what crypto needs, right? If you talk about institutions, you have your crypto native institutions, but you also have a lot of guys on the sideline who we have conversations with regulators, financial institutions on the street, and they're all still looking at the space, but they're looking at it as a fishbowl methodology. And the reason why is, well, yes, volumes are lower, but it also gives you time now to put in the right infrastructure, be it security, be it operational, and tech. So from our point of view, whilst it does seem slightly doom and gloom in the current climate with where Bitcoin's trading, where we see volumes, we're very constructive on how we see it moving forward, because if we put the right pipes in, rebuilding it from the ground up sort of pushes it in the right direction for us.
Yeah, I think we, the eternal optimist in the team here. So I think it's more of a spring than a winter, if you're talking about sort of timing in the cycle. I think we see some institutions. I think we're seeing institutions still very much building in the space, investing. There's still a ton of money in these venture funds that need to be deployed, so don't forget about this. And actually, the seed rounds, and actually a lot of teams haven't necessarily raised a lot of money per se. I think crypto just stays with two very, very different crowds. I think you keep the crowd that's, the institutional crowd that actually is interested in essentially the top names at BTC of things that they can sell into an investment committee and once a month, and they could basically sell to pensioners. And then there's the retail crowd that's probably more the Pepe crowd or the hamster crowd that needs to be mentioned apparently. And it's, when you think of like the next summer, it's basically where's that money gonna go? So we're monitoring this, but to be honest, it's like, BTC's been ranging for good reason. It's probably there's some institutions just buying in every time it dips.
Awesome, appreciate that. So sounds like what doesn't break us makes us definitely stronger, and we're all building and getting ready for the next round. So speaking of changes, do you guys notice any trends or differences, shifts from your audiences globally? So are there any specific region that is more interested in crypto or less interested in crypto? This time we'll start with the middle.
Well, thanks for that. I think we have seen a shift, right? And a lot of that shift, and we'll probably go into it later on, is caused regulatory above all else. I kind of feel like what we're looking at from a builder's point of view and from a clientele point of view is there is quite a big shift to the Europe and the Asia regions. We always talk about the next 1 billion users. Well, hey, Asia's got more than 1 billion. It's worth playing around over there. But what Asia brings, and this is something that I'm very constructive on being based out of Singapore, is Asia is one of the few regions where you have developing and developed, but you have countries which are more or less politically stable. You have people there who have access to phones. The infrastructure is there. And so it's a really good testing ground. And from a volume point of view, you have people who have always been curious about how it works. I think if you want to go down the pathway of the exotic portion, meaning the willingness to do interesting things when it comes to normal OTC trading, you're also going to find that within this region. So, look at the number of people who are attending KBW, and I'm pretty sure all of you are flying to Token next week. So Singapore's going to be crowded anyway. But it's a sign, right? And this is where we think there's going to be a very strong area of growth.
Awesome. Let's go down.
That's okay. I was wondering how you would go about it. It's. I think let's avoid the US question, and then on the point of like, there's definitely been a shift towards Asia. I'm officially moving to Singapore myself, and then there's just a big signal as part of the company. It's not necessarily. Well, it's the nature of more like business opportunities. It's the nature of like Asia being, the way to build business here is probably more face to face as such, more IRL. But very much, I think it's also a sign that there's a bit more builders that we meet over here. To be quite honest, there's a lot of activity in Dubai as well, and there are a few things that are quite idiosyncratic to our business, which is we're pretty visible and we have enough deal flow and enough things going on in Europe to need probably less focus over there. So there's an internal bias from us very much. But overall, we're getting more and more clarity in Hong Kong, especially. We're getting more and more clarity in Singapore. Here is a very interesting space so we don't have a business here. We can do venture investments. We can help Korean teams outside of Korea, but it's there's a ton of potential here as well. Japan is quite interesting. So yeah, there's a ton going in Asia, I would say, probably more than the rest of the world these days.
And I'll just quickly add that, like, not really a region, but more like I think post FTX especially, we've kind of seen a shift towards like decentralized like liquidity venues, as well as kind of like self-custodial venues, right? So there's a ton of projects these days that are being built, exchanges, like the next generation of exchanges that are kind of self-custodial. And a lot of the liquidity has been migrating slowly over time, but it has been to like the DYDXs and other kind of like decentralized venues, which, you know, eventually will come under kind of like global regulation, but for the time being is kind of a isolated area where, you know, there's still a lot of innovation and kind of like speed of kind of ideas that are, you know, being created.
Thank you guys for that. So one thing that we can all agree on that drives the shift of interest from different regions is the regulations. So globally and generally speaking, do we think that the regulations are headed in the right direction? Or if not, what needs to be on our attention? And this time we'll start with Yo.
So my team always kills me when I need to discuss regulation as such, but let's put it that way. So the US landscape is, you need to drive on the road, but they don't tell you what the speed limit is. And then you sort of discover, okay, that something is wrong or not. So we've always been, let's say historically, we've always been quite conservative on the regulatory side. We split the business basically with London, with Spot, basically we FCA registered with the local authorities in London to trade Spot, and then we basically do all the derivatives and DeFi stuff and so on from Singapore. So MAS is happy with that as well. That was more a 2021 discussion, to be honest. It wasn't necessarily sort of anything that would guide, you know, the last few years. And very much recently, it's much more, to be quite honest, about business development opportunities and really regulatory sort of drivers that drive the move to Asia. So I'd like to spin it into something that's, you know, much more BD driven than regulatory driven. But yeah, any country that has more clarity. I mean, I think Hong Kong got a lot of traction through the FCC license and so on with Hashkey, and was it OSL? I mean, Singapore's been, you know, pretty safe place to do business in with you know, reasonable clarity. So yeah, it's always helpful. I think at the end of the day, there's always some form of regulatory arbitrage if people between, you know, economies, the same way that the tax system works essentially.
And Shillang?
Yeah, I would just add that to you know, his point. It's not really about like being allowed like yes or no. It's more about the clarity, and then that's what's been lacking in the space. Like there can be jurisdictions that are very prohibitive, and that's fine. But if you're going to enforce by like, if it's regulation by enforcement, that's kind of like, and you're going to like look back 3, 5, 7 years, that's the issue, right? As a firm or as a business or project, you can't plant your roots firmly and invest a lot comfortably if you don't know what's going to happen and there's no clarity in the next 6 to 12 months, right? So I think that's what's kind of been lacking. But I do think generally like everything's been going in the right direction. There's a lot of positivity out of Dubai, out of Hong Kong, you know, out of, you know, Singapore. So I think in general it is, you know, going the right direction. But there's still a lot of progress to be made.
I think the way we look at it is we're very constructive when you look at it on a global basis. And the reason why is it's very easy for a regulator to come out and say, crypto is illegal, ban it, right? But they haven't done that. What you have found is regulators across the world have been trying to navigate and figure out what is the right way to put in place frameworks and how do you operate within these frameworks. Right now, it's almost like a race. And the reason why is, well, regulators themselves recognize. They recognize that we are an economy on ourselves. We bring with us everything from jobs, GDP growth, and because of that, the regulator wants to put in place that right framework. 2 years ago, Singapore and Asia was probably ahead of the curve. Hong Kong's caught up. Japan recently are looking at changing their regulations. Korea also has something currently with regards to the retail markets as well. And I think as institutional players ourselves, where we become, and it's very different from traditional finance, where within crypto, unfortunately, or fortunately actually, how you look at it, trading shops like ours, market makers, we are integral, and it is up to us to set the gold standard, be it regulatory and compliance and the right way of doing business. So because of that, the way we approach it, especially within firms such as GSR and how we do it, is we engage regulators. We sit down at these roundtables with the HKMA. We sit down talking to the MES. We talk to the guys in Dubai, the guys in London. And the reason why is, well, they don't claim to know it all anyway. They want our input. So putting together something like that, you kind of feel there is light at the end of the tunnel. And yes, will there be a situation of whack-a-mole over the next couple of months? For sure. But you have to see where regulation is now compared to where it was 6 months ago, compared to where it was 5 years ago. And we are progressively much further ahead. And it's only going to get faster from here, you feel.
Awesome. So a little more on the regulations front. I know we've been talking a lot, especially about APAC, but with the recent new updates on the ETFs, do you think that this has a very positive impact or negative impact on the institutional trading? This time, did we start with Shillang? Okay, Shillang.
Yeah, I mean, that seems like an easy answer. I think it's the recent Grayscale news and kind of the consensus that there's inevitability that there is going to be an ETF generally is very positive, right? I think there's a lot of products that can be built on top of that once the approval happens. It provides a lot more clarity, a lot more guidance. There's a headline just this morning saying that the Bitcoin ETF is going to bring in $30 trillion into the space. So in general, it's pretty easy. I think opinion that it's going to be positive.
I think, just to counter that slightly, in a way, we're very good at crypto of singing Kumbaya, patting our backs, and saying, go one way in terms of pricing action. I think what we also have to realize is though the ETF, while it brings about that ability for funds to flow in, it also offers exit liquidity on the other side of it. And that's actually, if you think about part of the right reason why you haven't seen markets get overexcited to when. We're still pricing it. We don't know what it means. For years, we've had things like GPTC, for instance, out there, and no one had figured out how do you get out of something like that. The ETFs represent something like that. But what it does bring to the table is it brings that form of institutional acceptance. It's a sign, it's a signal, right? It's the same concept of having a futures market. Yeah, maybe the banks won't trade in our spot markets right now, but they will be on CME. They will be trading on venues like that. So an ETF is a gateway for them. And not only that, but it signals to the rest of the market that crypto, digital currencies, Bitcoin, is being taken seriously. And because of that, it paves the way for the future in that regard.
Yeah, I think another way to phrase it is if you think of the institutionalization of the space, I mean, in a good way, some people who get some hate here and there is basically Goldman Sachs, but they are a good example in this space. So Goldman Sachs essentially institutionalized the commodity space in the 90s, and they did two things essentially. They did research, and they did indexing, what's called basically they just put points of reference where a fund manager or someone who manages someone else's money can just have can know if they're doing well or badly. And essentially all this TradFi money that we're trying to transform and hopefully not turn into, for them, an ETF is a good point of reference to just say, oh, this is what we can use as a bar, this is a standard that we need to achieve. And it's essentially speaking TradFi language to just get them to get new money to get into the crypto ecosystem, essentially.
Awesome. Let's switch gears a little bit. We've been talking about a lot of the Bitcoin big stuff, but let's talk about DeFi. So we've had DeFi summer about 2 years ago. It was explosive, and since then, I would say there's been a very steady growth in DeFi. But from institutional perspective, has there been any growth? Would you say there has been a somewhat of a transition period between centralized exchanges to using more DeFi-based projects or products? And we'll start in the middle this time.
This is a loaded question. DeFi is interesting. DeFi, if you take it a step back and let's be theoretical about what it stands for and what it's supposed to achieve, that's a very positive thing. Right? We're trying literally to, 1, for the masses, 2, transparency, 3, minimize fees. But we also have to take a step back and realize a few things. 1, humans are not infallible. Unfortunately, the nature of a human is human greed. And that's a bit of an issue. The other issue as well for institutions per se is whilst we love what DeFi can bring to the space, and as GSR, we've invested in a number of different DeFi protocols, different the exchange side as well, and seeing how it can develop. We're also cognizant that when we deploy, when we run strategies, there is more to it than just the transparency, the fee structure. You have operational risk, security risk, tech risk, and these are things which need to be addressed for that wave of institutional money to come in. Do I think that there is a world where this happens in the future? Yes. And the reason why is we speak to so many teams globally on a weekly basis, and they get it. Now the average conversation, when you talk to, let's say, a new DEX coming onto the market, it's no longer about, can we get, for instance, GSR to trade up a storm on it? It's more like, can we get your support? Because our target market are, for instance, the whales. They're the crypto native guys who are the more likely to use DEXs from day one. And that shows to me a growing up, an understanding of what's required. And yes, what we're seeing is some protocols, what they've done is they've even created 2 DEXs that are bridged very slightly, but one is KYC AML driven because they understand this is what institutions look out for compared to the rest. So I think this understanding of what drives institutions is going to be important for the next wave for DeFi. And I kind of feel like a lot more people are getting it than we did back in the DeFi summer.
I think let's split DeFi in two between trading and lending, essentially, or lending borrowing. And I think in the trading side, it's still really not institutionalized. I think it's still very much like this sort of falls into the 1.5% of all crypto users being just essentially DeFi users. But I was surprised even, so it was pre-FTX as such, so I was surprised that, so to give you context, as Wintermute, we have X amount of equity, and then we borrow from foundations, we borrow from also large institutions. And we had this conversation with a Swiss private bank and discovered that they're actually lending to us through a DeFi protocol. And they were pretty happy to do it because they had more control on when they would receive the money back. They could just pull the money whenever they wanted. And they had more control on collaterals and so on. And so if you dig a bit, you do find that actually institutions are pretty happy to lend through DEXs. Trading side is just really, really less the case. I think if you want to scale, I think if you asked me 2 years ago, I'm pretty sure I said on a similar panel that we'll have 20 permission pools with lots of institutions there, and it's still not the case. I think permission pools are not, it's not really taking up yet. There are trials around sort of RWA related tokens and so on and protocols, but I think we need a bit more. I think we've seen actually more CeFi reconquering the space with institutions, especially for trading, and with even more things like shops like GSR and us, essentially around OTC, and actually growing the percentage of trading that we do OTC, actually shifting even this away from centralized exchanges. So sadly, the answer of the point of failure of being centralized exchanges hasn't been yet to get people to embrace DeFi. It's been to just trusting even more the counterparty and just trying to dig more about who their counterparty was and trading just very much bilaterally.
Yeah, I would just add, completely agree with both my panelists said. It's definitely very much bifurcated. There's been a huge kind of buzz and boom in the RWA world, bringing all of that on chain. And that's great, but if you look under the hood for a lot of that, behind the scenes, it's basically just a series like SPVs or fund structures that have been set up, which is great. That's fine. That's regulated, but it perhaps isn't it's the first step towards kind of decentralization. But there is a lot of benefits in terms of capital efficiency, settlement efficiency, and everything else. But then, as you mentioned, on the trading side, I would say a lot of the DeFi protocols and infrastructure and exchanges reminds me a lot of the 2016, 2018 era currently on the DeFi side. There's a dozen L1, L2 chains out there, very fragmented liquidity, which I think from an institutional perspective, it's not something necessarily going to feel comfortable and touch. But from a trading side, I think there are a lot of just opportunities as existed back in 2017, 18 on the centralized exchange days. So I think that there is a lot of opportunity, but I think from an institutional perspective, we're still a bit away from kind of a purely DeFi world.
Awesome. So we've talked about the market trends, we've talked about regulations, we've talked about DeFi. So wrapping up, thinking of all of these things, do you think analyzing the institutional market trends is a good tool to make predictions in the future of what the crypto market will look like? And would that be something helpful to make potential future bets on our next runs? And this one, Yo, we'll start with you.
So can you repeat that for me? So the future, what we see in CeFi and DeFi?
So wrapping everything overall together, analyzing institutional market trends, is that going to be a good tool to make predictions for the future?
Yeah, I mean, so it's I like to give people the recipes, but not the result. Not the final cake. Essentially, not the final cook. So I used to, for everyone's context, for the ones who don't know, I used to trade interest rates and listen to central bankers all day, which sort of pushed me away from crypto until 2017, actually, because I had sadly not read the Bitcoin white paper yet. And essentially, the way I think about this, it's not necessarily the way Wintermute thinks, but essentially I just think of it as like, is there new money coming in or new money coming, money coming out of the system? And you essentially need new money coming in to get a new summer. And where would that money go? So depending on who invests on the other side, if it's institutions, there's probably people that, they have what's called fiduciary duty, so they have other people's money to take care of. They need to make sure they're investing it in something they have researched. And that's probably the BTC, the Ethereum of the world. And there's probably some of the emerging markets as such of the Algon space, like all the Avalanche, Solana, and so on. So all the names that are sufficiently known. And then if you think of the new money coming as more retail, like if you think that China is generally reopening in and just going, full tilt, full, remortgage your house and your grandmother's, house just to reinvest in, and then that will be in probably more in a Pepe or in some form of meme coin or any other blank space sort of meme coin as such. So I think if you have a good way to see those trends coming, then I think this is more where the summer will come from.
Awesome, Shillang.
I would say like institutional, but I think macro, as it has played a huge role previously in the past few years, the growth of the space will continue to play a tremendous role. Like more dollars were printed in that 2 to 3 year span, US dollars, than in the history of the US dollar. And I don't think people necessarily appreciate that. And that's completely gone, right? And that's not gonna happen for a very long time. So even if we see like regulatory clarity, even if we see continued growth, institutionalization, that amount of just loose capital that exists in the system is not the current condition. So I think continuing to follow in the macro trends is still a huge determinant if you're just looking at it from like a purely price action. But if you're stepping away from the price action, then there's a ton of things to be like optimistic about, right? From kind of the brightest minds are still entering the space, from CCIP to like decentralized sequencers to like new financial primitives on chain. There's a lot to be excited about. There's a ton of capital that were raised from the venture side that needs to be deployed. So I'm still very excited about the space.
I think he's touched on something which I've been a firm believer of. I think you need to bifurcate this space, the Web3 space. You need to bifurcate it into price action and the capital markets portion, and the growth of the tech. Honestly speaking, the growth of the tech has not slowed down. If anything, it's getting better. And the reason why is 2021, and dare I say this, shouldn't have happened the way it did. 2021, we all got overexcited. If you think 2017 was the day of the white paper, well, 2021 was a bit like the day of MVPs. And I kind of feel like we're growing, right? And I think whilst institutions come into this space, it's great for price action, so to speak. I am looking at it more from the space of institutions are still investing. They're still investing in blockchain projects, and a lot more projects now are, forget the concept of the next 1 billion users. Let's figure out how to get the next 1,000 users, and then add on 1,000 thereafter therein. And Asia presents a great breeding ground for that. And I think once we've managed to prove that we can use the underlying tech for the mom and pops of our generation out there on the street, it's much easier then to turn to your Web2 companies, to turn to your conglomerates and say, see, they're using it, there is a marketplace. And that's what's going to bring the next wave. And that is what we're seeing. There is a lot more focus on who are your users. And to the builders out there then, the focus should be how do you target, what is your niche market, and have you actually sized the addressable market correctly? There's no point saying there's 3 billion gamers in the world. That's great. But if your game only appeals to 5,000 of them, well, technically you have not sized it correctly. And I think that the people will actually be the ones to drive it more as indicators than actual institutions in this space.
Awesome. And our time is up. And with ending note, I will throw you guys one curve questions. Will there be another next bull run in the next, say, 1 to 2 years? Quick yes or no, in your own opinions. And we'll wrap it up.
Yes.
I'm going to go with yes as well.
Yeah.
Awesome. So we're all bullish now. Thank you so much for joining us today. 감사합니다.